Okay, we are talking about SPX trades, and we are going to be looking at 4 days out, 12 days out, and quarterlies, 47 days out right now. So first of all, we're going to pull up a live chart of the SPX, and what these are is red lines is and green line is standard deviations. And the green lines represent there's a 68% probability that the market will close in between these two green lines in 47 days. The red lines are 94% chance that the market will close in between those two lines. So right now, as we can see, actually, this is probably the worst time to sell this because it is dead center right in the middle. So we're going to probably get a really bad credit, but we're going to try anyways. And with paper account, it will probably just get filled. So one of the reasons why I think the market is going to pull back on Monday is we come over here and look at this is the Fed buying, potential buying. There's nothing for Monday, May 13th. So Tuesday, Wednesday, Thursday, Friday, they're going to be pumping billions of dollars in. Wednesday, not so much, but Tuesday, Thursday, Friday. Friday looks like a big buy day. So we can say, okay, market will have trouble Monday, possibly Wednesday, and but the rest of the week it should do fine. So the other indicators, we go down here, and these are some new indicators I've been using. When this green line shoots up above here, it usually indicates it's starting to get time to buy. So buy around here, and so forth. So you can look at the opposite and say, okay, it looks like it's coming down, and it looks like it's time to sell off. And again up here, it looks like it's going to sell off. So that yellow line gets above that, we're in deep overbought territory. And as you can just see here, we're at all-time highs, and we've had 3 days that we have not been able to break out from that level. So given all that, we are going to be looking at some tops and some bottoms of where to sell this. So we're going to go to our paper trade account. We already have a position here for the upside. A while ago, we sold the 1655, 1660 level. And we also sold the 1555, 1565, 12 days out. So those trades are already on. We're already profited up. We're up $425 out of those. So I wanted to quickly go over to analyze, and we're going to add a trade June 22nd, and I rolled this up to 99% probability just for fun, and 99% probability that it's going to stay in about 1470 to 1810. So we're just going to go look at those trades real quick, and that's the June monthly. So that's 39 days out. And man, we have to even load this up further, probably 70. What did I say? So the bottom side, 1473. So if you hit sell here, vertical, see, you can barely get any credits for that. 20-cent credit. Negative 70 is what the thing, so you can't even get, you'd have to pay people to buy that or sell that, which is ridiculous. So that is where you have to start figuring out the levels. So luckily for us, it can do that for us. So we're going to do a 2 standard deviation. So we want a 98% chance. So that puts us up at 1509 and 1766. Okay, so that's more like it. And then we're going to set slices to charts. We're going to add it to this chart, and it will give us our price levels out. for those charts. So those are still pretty far away. So 1510 and 1767. So we're going to go to trade and look at the 1510 and do a vertical. So 40 cents. We want to get 50. So we know that the market's going to go down tomorrow. So we'll do 55 even, and we'll put that at 10 contracts. And this is for 39 days out. And let me make sure before I do that, I'm going to hit Q on this so it doesn't go. Before I do that, that is a delta 8. So I know a lot of people just by their laws they do delta 10. So we're actually in a better position. So that actually, when you see delta 8, that means there's an 8% chance that this is actually going to get there. And then theta decay means that's 18 cents a day that this is going to erode. So every day that this erodes, we're going to make 18 bucks. Now, if the market drops, though, that changes. That also changes as well, because obviously it's going to gain some. So we have our levels for June 39th out there. Let's go ahead and look for some more on May 4th, which this will be fun to go look and to analyze. So tomorrow's going to be May 13th. We want to look at 2 standard deviations out and make sure, because we know this is going to be a little choppy, we'll do 3 standard deviations out too, just to see what we get. And we'll set that to the chart. And that +3. Okay. So 1689, so 1690 and 1580 is what we're going to try to sell. So 1580, sell vertical, and we do a 10 wide spread. So 1580, 1575, you get 10 cents, and I'll just show you on 10 contracts real quick how this works. So that you're only risking 5,000 to make 100, but we don't want that. We want to take in more credit, and we're going to risk a little bit more. We want more room to play with, so just in case the stock drops down. So since we know we're going to have a down day, we're going to look at this tomorrow and see what happens. So we're going to confirm and send this off. And we know the market's going to go up, so we already have our position, and we don't really want to put anything else on. So it's still at delta 11, so there's an 11% chance it could get there, but we don't want that to get there at all, and there's ways to defend it, but we are not going to at this point. We don't need to. And so we come back here, we look at monitor, and so that means we have our downside and our upside for 4 days out. We have our downside for 12 days out, and we can go back to our trade tab, and we had one that was queued. Now, we'll just do the 1510s again.